more insight, more understanding. This is Fox 23 News in Depth with Rick Marino.
They take months and months to write an opinion, and they don't even discuss that point. We've taken in hundreds of billions of dollars, not millions, hundreds of billions of dollars. And so I said, well, what happens to all the money that we took in? It wasn't discussed. Wouldn't you think they would have put one sentence in there saying that keep the money or don't keep the money, right? I guess it has to get litigated for the next 2 years.
One of President Trump's key economic policy points was ruled unconstitutional today by the U.S. Supreme Court, and he clearly wasn't happy about it. The president clearly frustrated, and American consumers are wondering what's next for their wallets, especially as Trump says he's just going to put in more tariffs. In just the last 12 hours, the court ruled 6-3 the president unlawfully bypassed Congress with his tariffs. Hours later, President Trump signed an executive order putting in a temporary global tariff of 10%. He also insisted some other tariffs that he has the authority to implement will remain in place. Some congressional Democrats are now calling for direct consumer refund checks. Joining me on the program to speak unedited about this topic and others impacting your money is BOK Financial's Chief Investment Strategist, Steve Wyett. Back on the program to speak unedited with us, and let me tell you, the stars have aligned today, is BOK Financial Chief Investment Strategist Steve Wyett. Steve, thanks for coming by.
Rick, thank you. It was a perfect day to come by and have a conversation. We've got a few things to talk about.
Yeah, let's talk about the tariff ruling. I think maybe some of us were thinking this wouldn't even come out till June, but what are your reactions to what's going to happen?
So, look, this is something we've been talking about for a while, and candidly, the way that the decision came out, it was 6-3 against the president for the use of the International Emergency Economic Powers Act, or IEPA, as the basis for him to levy the tariffs that he's had in place. That had been kind of a growing consensus. You're right. We didn't know exactly when the Supreme Court was going to come out and tell us. They kind of have a weird schedule of when they provide these decisions. But when that hit this morning, the capital markets actually reacted. Stocks moved a little bit higher. Interest rates were a little bit higher. You saw retail stocks do a little bit better. Just the general idea that, okay, maybe the worst of the tariffs are not going to be in place. But I've got to tell you, this has been our sense all along, too, is that as this occurred, the president was very quick. He came out with a press conference later in the day saying that he's going to levy tariffs under a different use of rules at 10% across the board. He's going to replace probably 80% of the tariffs. Then there are some other things that they might have to do that may take some congressional action. But the vast majority of the tariffs are going to be replaced. The other interesting part of what the Supreme Court did is had a question about, okay, what do we do with the tariffs we've already collected? The Supreme Court didn't say anything about that. And so we don't know what that means from a refund standpoint. We have seen companies file suit in the International Trade Court, the ITC. In last year, like 1,000 companies filed, and just in January of this year, another 900 companies. They did that in case this occurred. But how that's going to work is anybody's guess, and I have no idea how the ITC works, if they can group this together. If they've got almost 2,000 cases in front of them now. They're going to have to try each one individually. If somebody disagrees, does it end up back in front of the Supreme Court? It's going to be a very interesting period as we move forward. So we got some answers from the Supreme Court, but they sure left a lot of questions unanswered too.
My fear is people are going to start going to Walmart or get on Amazon, and they're expecting a price drop right now. It doesn't seem like that's what's going to happen.
Yeah, I don't think that's going to happen. One is because the uncertainty of what the additional tariffs are going to be. And the reality is the stuff that people are buying today, the tariffs have already been paid. So this is where the questions about where does the money go from the refunds? Back to the companies? Do they then lower prices to consumers? It just will be very interesting to see how all that works out. What we do know is that consumers aren't directly going to get the rebates from this. I suppose the administration could decide to he's talked about doing some sort of a tariff rebate at some point in the past. Maybe that's still an option. But to your point, big picture, This probably reduces some tariff price pressure going forward, but it's not like we're going to go back to where we were before the tariffs were implemented.
Let's say outside of the tariffs, are we still experiencing inflation on other levels, other global causes?
Yeah, sure. And so just today as well, in addition to the Supreme Court, we got the Fed's preferred measure of inflation, the Personal Consumption Expenditures Index, or PCE. And on a core rate, it came in about 0.1% hotter, 0.4%. The year-over-year rate's 3%. So it's not like inflation's taken off and moving back higher quickly, but it's clear that this idea of getting to 2% inflation, this idea that the Fed can cut rates dramatically because inflation is falling, that's not happening either. Now, it didn't change our big picture thought that we do think inflation is going to continue to come down a little bit, and the Fed will be able to lower interest rates as we get further into the year, but it's going to take some time. And in the interim, Rick, we as consumers, we all know this. We're still getting squeezed by inflation, and there's many areas of our budget. I can look at the overall number at 3%. Electricity costs are up more than 3%. Insurance costs are up more than 3%. Property taxes are up more than 3%. So there's a whole lot of areas where, for many consumers, you're still feeling the squeeze of higher prices.
I'm interested in your thoughts on this. I was wondering, since the last time we spoke, we've obviously seen the president and Jerome Powell have their back and forths, and the president wants a rate cut. They didn't cut rates last time. Does the economic data back up keeping rates the same, or was that Powell saying, you mess with me, I mess with you?
I don't think it was politically motivated on Powell's part. Yes, the president has been pretty clear in his desire to see interest rates move lower. By the way, since our last conversation, we now know who the next Fed chair, the nomination for the next Fed chair, a guy named Kevin Warsh. I can't imagine that Mr. Warsh got that job if he wasn't willing to say, I think rates should be lower too. But now we're in this position of, okay, what does the data lead us to do? And so we got fourth quarter GDP out today as well. Man, it's just a busy day, a lot of information. Growth was a little slower in the fourth quarter than we thought. Inflation on the PCE was a little higher. That tells me, look, the Fed made the right decision. They didn't need to cut rates at the last meeting. In his press conference, Fed Chair Powell talked about the employment market getting a little better, and unemployment's at 4.3%. Now, it's not as robust as it was 24 months ago, but 4.3% is still pretty low on unemployment. You've got a little bit higher inflation. That just tells me the Fed should stay where they are, and I really don't think it was a political decision. In fact, in his press conference, Fed Chair Powell tried very hard to not even talk about it. He just said, I have nothing for you. He got a lot of questions around the president, and he just said, I don't have anything for you there.
Well, you do watch the markets, and the Dow hit 50,000 since we last spoke. I'm wondering, is there a point where we get too hot?
Well, we always are concerned. Concerned is the wrong word. We always watch valuations. How enthusiastic are investors getting about paying for the future? When we think about how stocks trade, they trade on a multiple of future earnings, and there's a lot of assumptions built into that. So as investors get enthusiastic, they're willing to pay a little bit more. Maybe they think growth's going to be a little bit higher. That by definition means the risk of that not happening goes up as well. And so this is why I think for many investors, look, when I get the most excited about the stock market is when prices are down. Yeah. That's when the risk is less. Now, I don't like the trip on the way down, but as I look forward, my expectations of what I can earn on stocks going forward is higher if the prices are lower. As I sit here today, that doesn't mean we would tell investors to go sell everything. We're bullish on the economy. Earnings estimates are still looking at being up 15 to 17% this year. In some areas of the market, even a little faster than that. But the idea that we're going to get 20% plus returns like we had the last two of the last 3 years, that may not be as likely, but sure, you've got if the idea is, are we in a bubble? I hear that from time to time, particularly around the AI trade. Our sense is that we're not nearly at the valuation levels that we saw like in late 99 and early 2000, the internet bubble or some of those periods, these companies are still making a lot of money, and we still have a pretty solid outlook on growth going forward.
I got just a little bit of time left, but it looks like we might have a conflict with Iran coming up. I'm wondering, what do you think when it comes to oil and just the overall global markets in general?
So the oil prices, that's where the most direct impact has been. We've got a big fleet in the Mediterranean over there. We're building it up. This doesn't look like this is just some sort of a show of strength necessarily. This is putting the assets in place to actually do something. This is a very sensitive part of the world, obviously. 25% of the world's oil goes through the Straits of Hormuz, which is right in that area. If that would get cut off, you could see some very significant price increases. You've seen oil prices move up some. I think if we get that, it's going to be short-term in nature. Long-term, that's not what anybody wants. I hope that we're able to come to an agreement that does not include some sort of military action. If it comes to that, I hope it's very limited and successful in a very militaristic way, but does not turn into something that is an outcome that none of us would want.
Steve, I'm out of time, but thank you so much for stopping by. I appreciate it.
It's great to talk to you. Thank you so much. Thank you.
Especially on a perfect day when the stars align.